first story that we want to address right now. As some newspapers are saying, that the winter session of Parliament is expected to be a substantial one, with many bills which are likely to be passed, especially in the economic sphere. One area is going to be insurance, the Insurance Amendment Bill. It's listed as a bill which will be taken up. But what is within the bill is essentially what we want to talk about. There are two things. There are things like 100% FDI, composite license, and those things are understood that they will be taken up. But there were two specific issues. One, of course, was open architecture for individual agents, which is important for LIC, which we reported on. Yash got you that story a couple of hours back. The second one is now flashing at the bottom of the screen, which is with regards to the government likely in the bill to propose permitting merger between insurance and non-insurance companies. Yash is here. Yash, let's start with the second one first, if we can.
Well, that's correct, Prashant. First of all, let me just tell you, it was 4 years ago when the amendments to the Insurance Act were first introduced. It's taken about 4 years, a lot of back and forth, a lot of committees, a lot of consultation papers. Finally, the winter session of the Parliament, the upcoming session, is expected to be to table the Insurance Amendment Bill, and that has been made a list of business for the winter session of the Parliament. As you said, the second one first, a big positive expected as far as Max Financial Services is concerned, because what we're picking up from our sources is that the government is likely to, of course, table the Insurance Amendment Bill, and under that, it is expected to allow mergers between insurance companies and non-insurance companies. You know, Max Financial Services, Axis Max Life have been talking about, wanting to do this reverse merger between Axis Max Life and Max Financial Services for simplification of the corporate structure and removal of that holding company discount from Max Financial Services. And the government this time around in the winter session, according to our sources, may very well allow that merger between insurance company and non-insurance company. As I said, this will pave the way for the merger between Axis Max Life into Max Financial Services, simplify the corporate structure between the entities, and removing the holdco discount as far as Max Financial Services is concerned, which owns about 80% stake when it comes to Axis Max Life. Currently, the Section 35 of Insurance Act restricts mergers between insurance companies and non-insurance companies. But once the government allows this particular merger, which is expected to happen in the winter session, that Section 35 would be removed and the mergers between insurance companies and non-insurance companies would be allowed. What we've also been given to understand, and it seems that, mergers and acquisitions would not require IRDAI approval, as IRDAI's role would be of framing regulations and granting registration to new insurance companies from the point of view of better corporate governance.
Okay, all right. Yash, thanks very much for that. This is, of course, important because we'll need to, for Max Finance especially, this is an important one. Yash, very, very quickly, in 30 seconds, the open architecture bit which we've already reported on, because LIC is the one which is affected the most, right? I mean, 90% of the premium they collect is via agents. I mean, that's the channel. So take us through it.
Well, as you said, two important numbers. LIC collects more than 90% of its new business premium from agents, and SBI Life collects 28% of its new business premium from agents. And that agency network for both these companies could come under threat if open architecture is indeed allowed, which we are given to understand from our sources that the government, as a part of the same Insurance Amendment Bill, is expected to allow open architecture. What does open architecture for individual agents mean? Essentially, currently, these agents can only tie up with one life, one general and one health insurance companies. But once open architecture gets allowed, then individual agents will be allowed to tie up with multiple life, multiple health and multiple general insurance companies. What happens in that case is that if any other insurance company is paying slightly higher commission to an agent as against its primary insurer, then the agent, in search of that better commission, could switch to that other insurance company. And in that case, the primary insurer might have to pay higher commission to match up with the second insurer to retain the agent, or maybe lose out on that business. Why is it only a big negative for LIC and SBI Life? Because large part of their businesses do come from the agents, and hence the maximum impact of this on the negative side goes to them as well.
Okay, all right. Yash, thank you very much for that. We'll get